Hi, my name is Nick Godfrey, and I'm a life and health insurance broker. Today, we're going to talk about how technology has changed employee benefits. So let's jump right in. So here we are. How has technology changed employee benefits? Well, the problem with the old employee benefit plans, and they've been around for years, is that they're still operating old, unresponsive systems. They've been selling a one-size-fits-all plan design. They're not very nimble at all, and their pricing model is outdated. Employers are telling me that every year their plans are getting more and more expensive, and they find that the employers are paying for benefits that their employees simply aren't using. So what's great is that technology can now unbundle a traditional plan and pass the savings along to the employer. So let's talk about a traditional plan cost breakdown. So what happens is we have claims, they have to be processed, but also built into the pricing of this plan are the trends in the industry. They also build in inflation reserves and commissions, and that drives the price up. Let's talk about how a traditional plan really works, or any plan for that matter. We have insurance risk, which really only represents 5 to 10%, and then we have the administration side, which represents the 90 to 95% of your plan cost. This 5 to 10% of your plan cost is really just what we call the pooled benefits. This is the insurance side of things. The other side is where all the expenses are: prescription drugs, medical practitioners, and a basic dental plan coverage. This is where the bulk of the cost is. This is really just administration. It's money in and money out. So let's see how they charge to do this administration work. Again, they have to process the claims. They're building in the trend factor, inflation, and reserves. They're also building in their commissions for the brokers like me. So the administration costs, let's say you have a plan that costs $1,000 a month in premium. The insurance company's looking at $750 in claims. $250 of that $1,000 is going to be spent by the insurance company for administration commissions, profit, reserves, and trending. So you can see that as a percentage, the administration fee is 25%. What we're able to do with technology is unbundle the traditional plan, and we use what are called administrative services only. Administrative services only used to really only be available to really large companies, but now it is available to smaller businesses. And essentially all it covers off are the two big items: claims processing and commissions. There are no added costs for reserves, inflation, or industry trending. And you can see the administration services only is an arrangement in which an organization funds its own employee benefit plan, such as a health plan, but hires a third-party administrator to perform the administrative services. So let's see what the administration costs look like for this. Rather than a premium, we're making a $1,000 deposit to this budgeted plan. Let's say, for example, we had a $500 claim. There'll be a $75 administration charge, so there'll be a balance within the account of $425. The administration fee as a percentage is a savings. It's only 15%. So let's talk about how ASO works again. It's really just deposits to the plan, minus the claims, the insurance, and the administration charges, and whatever's left over is your balance. We will estimate the deposits to this account by reviewing your current rates. It really is just a budget with a monthly reconciliation. Monthly surplus or deficit would be carried forward. And we can talk about that after every month and look at it and go, are we up or are we down? Do we need to make any adjustments? Very transparent. Here's the report that an employer would be getting. They'll say, oh, this is how much money we put in this month. This is what the insurance cost. This is what the health and drugs cost. So they're only paying for what they actually used. And here are the administration charges. We also have what's called catastrophic coverage here. That's in case there's a really crazy drug claim, somebody gets really sick, and we need to cover a very large claim. That stop loss is an insurance cost that helps take care of those really high claims so that the employer doesn't end up getting stuck with them. So what we have are really flexible plan designs. We can create a bronze, silver, and gold. Owners get a good plan. Managers get or different levels of employees. So there's a lot of flexibility in how we can design the plan. It works really well. So what we say is, let's embrace technology. It's time for a change. We can create a better plan. It's flexible, lower cost administration, superior reporting, transparent. You're going to see what the money in, money out, and what the costs are. And we're going to take that fat out of the traditional plan and pass it along to you, the employer, for a significant amount of savings. So thanks very much for your time. Our byline is, we help successful business owners build a better benefits plan than they can get anywhere else. And the latest tech gives business owners flexible, cost-efficient employee benefit plans. Please give me a call. Be happy to pull together a proposal for you. Thanks for your time.